Good afternoon, everyone. It's Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you please type the number one in the chat box, let me know that you can. I'd greatly appreciate it. Afternoon, Brenda. Morning, Helen. Lots of ones in there. Hey, good morning, Jim. Afternoon, rather. There you go, Alex. Back in the saddle again, baby. I love it. Hey, Andres, great to see you. Afternoon, Kevin. All right, all right, all right. Yep, got it. Thank you for that, Andrew. Uh, volume first, camera second. There I am. All right. Fantastic. As we do get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. Camera's looking okay. Let's just move that down where I could see a little bit better. There we go. Awesome. More better for me. So our agenda for today, we're going to go through our follow us page. We'll talk about today's trade. So whatever trades you've done, they could be today, they could be some from the last couple of days. That's fine. Open, close, win, lose, draw doesn't matter. Funded, non-funded doesn't matter because as far as I'm concerned, they're all non-funded, right? It's all about hitting that enter button. We'll look at economic reports. Not that they really matter right now. We'll do a review of the market. We'll look at upcoming trainings. We've got our weekly training topic for this week, and then your stocks in review. That last section is really about you. I don't need to teach it or go through it. The whole idea was to give you an opportunity to have me look at some candidates for you as potentials that you're considering, at least to give you my feedback on what I see on the chart. All right. So, Andrew, can you help Alex out there and get that taken care of, please? Uh, hey, Will, how we doing? Yep, I got it, Brenda. That's fine. There's a bunch, Will. I can't see it all on two or three pages. I got to scroll down. Good. I'm glad, Will. Excellent. Excellent. So here's our follow us page, guys. Look, everything on this page, it's all our social media channels with the exception of our blog and our um, como se llama? Trading Post, which is our newsletter. You have to subscribe to the newsletter separately. We don't throw everybody into that newsletter. You've got to click on it to get started with that. So it's a great newsletter where we come out and give you hot stocks that are happening before the market opens. A couple things for you to check out that you may or may not have realized were going on. So if you're interested, great. If not, that's cool. No harm, no foul. Today's trades. What trades did you do? Drop them in. What trades did you do, guys? Whether they were win, lose, draw, doesn't matter. Funded, not funded, again, doesn't matter. As far as I'm concerned, I'm never going to ask you that. As far as I'm concerned, they're all non-funded. Um, all right. So Trip put in two scalps this morning. I escaped from the Roku rollover for $15 in 2 minutes, but captured 119.6% on IWM in 12 minutes. 119%, guys. So if he bought the option at $2-ish, whatever it was, he sold it at four, right? That's over four. That's 119% in just 2 minutes. Great setup there, Trip. Excellent. Jeff said closed Christmas Amazon rally trade this morning for $1,600 in since 10:15. We'll re-enter on a pullback. Yeah, Amazon, what a move today. I saw that gap up and I went, yes, because that's in my long-term portfolio. So I love that they're all at all-time highs right now. Tripp said 90 cents was what his cost was. So guys, there you go. Norman said I sold a naked put on AAOI for $36. About 2 minutes before 4 p.m. on Friday, stock dipped to 35.96, and I received an assignment email. Um, yeah, so remember, Norman, you can be assigned when you sell that put. It's not that they can't assign you if it's a different price. If that price is if you sold the 40 and the stock is at 30, they could still assign it, right? Or at 50, they could still assign it. So it doesn't matter what that price is. You can be assigned always on it. It's just normally if there's intrinsic value, you're going to be assigned. If there's no intrinsic value, normally that you won't. When it's close-ish, someone may have assigned it because they didn't have the cash to deal with it on their end. So you wind up getting that bad end of that stick, which is why we always close short legs before the market closes on expiration. So hopefully it wasn't something that was too painful there. Andre said took a SPY put shortly after the open below the 100% 685 level down to net minus 382. level at 608. Nice. Good job. Um, yeah, Trip said, love the prices on the daily options. They are good on IWM. Alex said, I had my first bona fide profitable month last month, up not quite 4% from covered calls only. I was thrilled. There you go. Listen, 4%. If you can do 4% a month on covered calls, that's 48% without compounding. 3% doubles your account in 2 years. 4% is even better than that. I don't feel like doing math, but Jim said buy to open 5 SPX weeklies, W.X, weekly.x, calls at 10:30 Central Time. Still in the trade, up $2,100 now. Woo! 20-ish%. Great job on that, Jim. Les said, did you see Kimberly Clark is now buying Kenvue, which is Tylenol? I did not. I did not. That is excellent. Yeah, Monday's a busy day. I get a couple of trades off if I'm lucky, and then it's just team member after team member wanting, questions of what do we do about this, what about that. Monday is, back to work day, right? So I'm happy to get a couple off. But no, I appreciate the update on that, Les. Thank you. Alex said some of the trades with 30 to 40% return over 1 to 2 months, average P&L just under 7%. Were they covered call? So how, Alex, what were you doing with the covered calls? Are they weeklies? Are you trading monthlies? Because you said return over 1 to 2 months. Um, nice, very nice. Excellent. Okay. Yep. Weekly sold separate, sold repeatedly as long as I could hold them. There you go. And that's the part I like the best. Is just that being able to find a good one and go, ooh, I like this one, and then it's just give me cash, give me cash, give me cash, give me cash week after week until it runs out of steam. Then you go bye bye and you find somebody else. Look at covered calls like a short-term relationship. I'm not going out on a one-off date. That's not my goal. But if I don't like the person after the first date, I'm not going out again, right? To me, it's more of let's go out on a date. Yeah, we got to know each other a little bit. It all worked out okay. I'm okay for another date, and another date, and another date. And when things don't work out, that's okay. Sell the stock and go find a different stock to date. But it's all short term. There's no relationship building here for me. I will not get tied to any one individual stock. Um, okay, good. So let's see. Today, Carvana, right? Carvana. Now, this was not a typical trade. This certainly does not qualify as a pop trade. It was not a typical trade for me. We opened up and pulled back. And I watched that pullback. And remember, we're going to look at the S&P in a few minutes. Remember, on the S&P, we had gapped all the way up. So we had a really nice move right out of the gate on the S&P, right? So, oops. So we go back to Carvana, and we got a quick pullback and a bounce. I've got a really strong setup happening in here. So let's go look at a 5-minute candle. On the 5-minute for today, you can see it's the first candle was a gap and go, right? A gap up, it pulled back, and then it bounced. So I can't get anything off of the fives. Let's go look at the ones. So on the 1-minute candle, we got that move down, right? So we opened up about flat-ish. We ran down all the way to this fib line, which was 303.48. We came in with a low of 302.42. So about a buck below there, which was nice. I was happy to see that. And then we opened up flat and pulled back on this next candle, right? So if we've got 303.48, we came down to a low here of 304.04. So about 50 cents away. And we bounced, right? So I took one contract on this only. And when you look, let me get a line. I had a built-in stop, which was right there, 302.42. Let me just check. I think that's okay. It didn't come through. Good. So 303.42, which was the low of the day. That was going to be my stop. If we pulled back down to that level, 1 minute. If we pulled back down to that level, we were going to be out of the trade. So if we're in this trade at, the stock was at 330 and a half, 303 and a half. We're in at 304 and a half, down to 302 and a half. So I had $2 of risk in there. We've had a really nice move. We ran up into our fib line. Oh, go back to the daily. We ran up into our fib line. So the bounce off of 303, running up to 327, guys. What a phenomenal move. Let me just go back. What a phenomenal move on Carvana, right? I didn't get it all. When I saw this topping pattern, we rolled over and started showing a lot of weakness here. This is our 950 closing candle, 5 minutes, right? So now let's go find 950. 46. So here you can see it on the ones. We had this pullback and this bounce. So we got up to a higher high there. I was happy than that. Higher high, lower high, move up, lower high. There's that 950 candle, guys. When we got that lower high and we failed, it was time to go. So if we're in this trade at 304 and a half, right? And we're out as we started pulling back on this candle at 310 and a half ish, right? Let me just draw an arrow to it. It's easier so we don't, so you know what I'm talking about. I dragged it out to the right so we can see the number. One more time. There we go. To 310 and a half. You're talking about an $8 move on the stop. If you've got a 70 delta with an $8 move, 8 times 7, 560. So, and on an $8 move, you're going from 70 to 74, 75 in your delta. Don't even count that. Just count the 70 delta. You're looking at a pretty decent return on the position. Now, did it work out if I would have held it? Yep, it did. Again, not a standard pop trade, guys, but pop is a method, not the only method to trade. When Tripp talks about what he does on his trades with the Hakanashi scalp, and Amelia comes in and talks about her spreads that she does and so forth, and Will is doing his short-term trades. He's doing his $100 trades. He's got all kinds of different patterns that he's trading, right, and the likes. It's a different methodology. I have multiple methods. Alex did his with covered calls, right? Multiple methodologies that you could trade from. Thank you, Deborah. Deborah said, nice trade, Rob. Well done. Brendan said, congrats to everybody. And I've got SPY, and I'm going to share Brenda's trades with you guys. So SPY, we had a gap up. Okay? So what happened on SPY? Let's go look at a 5-minute chart. Right? SPY gapped up, failed, retested, and dropped. Okay. Now at this time, what's going on? Well, the S&P is dropping rapidly, right? So at this point, it's okay. Let's go ahead and jump on the bandwagon and look at, we got the fib line at 683 and a half. We closed at 683.17. So 30 cents below, we stretched all the way back up, I think to the penny. Our high here was 683.54 versus 683.55. I mean, we're literally a penny, right? Different. And we failed off of there. Okay. So we got down to 682 and a half. Am I on the right candle though? No, it was the next candle. Right here, 682 and a half. And here's the fib line. 679.75, we'll call it. $1 above that will be 680.75. Let's just set that up. 680.75. All right, so actually I've got it on a candle. It's over here. It's on this candle here that we took it, right? And the trade is over. So if you're in that trade, at 682 and a half, and you get out at 680 and three-quarter, it's almost $2. It's SPY. I'm not looking for a $6, $8, $12 move at all. I am not. I'm looking for very small moves. And normally I would have shown Brenda's trades earlier than mine. I would have showed them first. I purposely waited on hers to bring them in now. Brenda sends in screenshots. Now, Brenda does very large amount of contracts. I want to talk about that, right? And the methodology behind it. But if you look, let me grab a drawing tool. You know what? Let me change this to white so it sticks out a bit better. White. There we go. Tom, in capital, all caps. Why just small moves? It's the S&P. I'm not getting the move like I will on a $20 move on Carvana on SPY, because SPY is 1/10 of what the S&P does. So the S&P moves 10 points. It's the equivalent of SPY moving 1. So you don't get those large moves, but you get consistent moves with very low cost options. That's what I'm getting at with that, Tom. Does that make sense? All right. So the very first trade, good. Appreciate it, Tom. Thank you for the one there. The very first trade for Brenda was at 10:02 this morning. Now, look at the number of contracts. She's got massive numbers, guys. 20,000 contracts. It's green. It was a buy. She bought the November 3rd, which is today, which is what she should be buying. 684 puts at $2.62. So I want to touch on that first. If you're looking at $2.62 times 100 shares, you're investing $262 in that trade. That's all is required for you to be able to do one contract. So Brenda did 20,000 on hers. She added 30,000. She added another 30,000. She's got 80 in total and different prices, 262, 251, 232. So she dollar cost averaged down as the position was moving in. She got in a little bit early, got in again, got in again. It started to make its drop and was able to go ahead and scale out. But here's the thing, guys. Let's say she didn't get in at these lower prices. Let's say worst case scenario, she got in at $2.62, right? Is where her entry was. The exit was $3.75. Let's say it was $3.62. Why? Because it's $1. It's easy math. I don't have to do freaking calculations. That's why. Well, if that's the case, if you invested $262 and you sold it for $100 profit, you're up 45%, 42%, 40%, whatever the number is. I mean, someone can do the math and figure out the percentage if you'd like. But 40%, whatever the numbers are, you have got a massive return on that. 38.18%, Alex said. Perfect. Thank you, Alex. So 38% on this for one trade, one day, and she got in at 10:02 and got out at 10:28. So now you're talking about 26 minutes being in that trade. Not as fast as Trip, Brenda. You've got to work on that a little bit. I'm teasing, of course. It's not the same speed that Trip gets out, but it's not the same trade as Trip. Trips in and out of that trade massively quick because of the strategy. It's how it's now. It's not always quick, go, but you see a lot of Trips trades, 2 minutes, 5 minutes, 3 minutes. It's just the type of trade that he does. But guys, I don't want you to look at the number and go, I can't trade SPY the way Brendan does. Sure you can. You just do one contract instead of 80,000 contracts. You don't need to have an account that size. And again, everything is non-funded, guys. That's all I care about is all non-funded, right? You don't need an account that size. You start with one. Brendan didn't go out one day and go, you know what? I'm going to start trading SPY, and I think 80,000 contracts is the place to start. No, you start with one. You need to do the same thing. I am still of the opinion that you need to build out a trading system that is completely designed around SPY and only around SPY. I just had a brilliant idea, so I want to write it down. Only around SPY. That's it. It's an SPY setup. Brenda's setup may not work for you. Trip's setup may not work for you. You've got to take what they do, what you learn from me, from Trip, from Amelia, from Brandon, from Tony, from whomever. You got to take that and meld it together to make the strategy that works best for you. And that will not be the way that Rob trades or the way that Tony trades or Brandon or Trip or anybody else. It'll be the way that you trade, or at least that's the way it'll wind up, it'll be the way that you trade. Trips, Amelia said IWM today for her 25% in 5 minutes. There you go. Great job, Amelia. Great job to everybody, guys. Give them a hand. I mean, that was some great trades today. I love it. Absolutely love it. I'm not sure. Brenda, are your times Eastern or Central? Because the time would be your time. So it's going to be based on your time zone. Eastern. Thank you. There you go, Jim. Thank you, Brenda, for that. They're Eastern time, guys. Yep, great trades. There we go. Everybody putting kudos in there. Good job, everybody. Definitely appreciated that you drop them in. And so I purposely held this. I didn't do this number of contracts. I do smaller numbers. 5 contracts, 10 contracts, 50 contracts. I don't do 10 and 20 and 30 and 50, 80,000 contracts. Does that mean that I'm bad because I won't go that high up, or that Brenda's wrong for doing that? No, it's your comfort level. It's yours, right? I've got multiple businesses that I own and run, right? So I've got multiple things happening every single day, right? 5 different phone calls to make today that have absolutely nothing to do with trading related, wealth builders, business, or anything else, trading, anything to do with that at all. 5 that are all business related questions that have nothing to do with this, right? So I've got a lot going on in my life. So if I screw up and 10 contracts go against me because I wasn't paying attention, I'm not going to like it. But I screw up because 80,000 contracts go against me, man, we got a problem. We got a serious issue, right? There's some concentration happening there with that. um, yeah, again, everybody's saying congrats. That's great. Everybody's account is paper trade, Deborah. No one's account. Well, I can't ask if it's funded or non-funded. We start getting into advice at that point. Um, you're right. It's a lot of contracts to execute at one time and maintain and so forth. It is. So there was a student when I taught for the last company that I was with. There was a student that came to a live event that we did. It was a 2-day event that I taught. It was a specialty advanced training, and he was trading on average 20 to 30,000 contracts per trade, sometimes multiple times a day, of SPY and QQQ. Okay, and these were funded trades. And he was griping because of what TradeStation was charging him for it. And we sat down, we talked for a few minutes. I gave him some ideas. I even got on the phone with TradeStation to talk about where we were. We're in a live trading class right now. I'm the coach. You've got my account there. You can go look into my account, dot, 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 dot. And then we went back and forth, back and forth. We were able to negotiate a specialty commission price. And that's what he was talking about, is the commission. We were able to negotiate a specialty commission price, but he was doing, those higher numbers. I don't know if he was doing 80,000 contracts on one trade. He probably did, that in a day. So you can do it, and SPY, QQQ, the place to do it, if anything, right? You want to be very careful. This is not the place to do it on, Broadcom, or well, maybe even Broadcom is tough, on Booking or something like that, or Roku. You're becoming the entire market if you do that many, right? That's crazy to do that much. So even to the point, we did a training. I had someone call out to me and say, Rob, I'm a broker. And I understand options. I trade options. Actually, that's what it is. I own my own firm and I trade options. It's managed money for our clients with options trades. I'm trading S&P contracts and I want to start trading very big numbers. Have you done that before? I said, I've traded large numbers, but from the level of a brokerage firm, could I teach you what to do? Yes, but why would I? Brandon, who's done this before as a broker, hedge fund manager, all of that, let's get him to do the training for you. And Brandon flew to New York. This guy flew to New York. They spent one full day in our New York office. I spent a little bit of time with them there as well. We recorded it all and the likes, and Brandon taught him how to trade those larger numbers where the market maker is not, playing Three Stooges on you. Bop on the head, bop under the chin, slap in the face, where it's just coming out of all three directions. You have no idea what's happening to you, right? And then you look down and you're devastated, right? So there are ways of managing it. It's all a matter of how you get into that trade, right? And there are programs and ways that you can trade them that the market maker doesn't see those big numbers coming through. Market makers do like those bigger numbers because they get big, big, big premiums all in one trade, right? And they don't look at that as the average person. That's more of the market maker, professional trader taking those levels, those numbers. So they're happy to see that. Okay, let's see. All right, good. So let's jump in here. Economic report. So let's go over to Forex Factory. We will open this up to more, and there's the disclaimer. U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation. End of week is still all tentative. So today already we had a report. 10 o'clock. Oh, let me change this back over to red. So 10 o'clock, these were important reports, both of them, because they came out when the market was open, and one of them were red. We've got nothing tomorrow. 8:15, I don't care unless you're trading futures. 10 o'clock PMI, very important report, Purchasing Managers Index. This was ISM's manufacturing PMI. This is services PMI. Purchasing Managers Index. This purchasing manager is talking about what it's costing them to buy things. So, and when I was in manufacturing, purchasing, materials management, all of that reported to me. And my purchasing manager knew very well, very, very, very well, that from me, that we did not make money when we sold the product. We sold this pen and we sold it for $10, right? How good could Glenn buy the materials for? If he could buy them very inexpensively, we made money. If he bought them too high, we broke even or lost money on that deal, right? So we made money on the buy. So that PMI is critical. Now, this is listed as orange. right? 3:30 on Thursday. I'm going to list this as red, guys, and here's why. I don't know if it is or isn't red, but I'm going to have an optimism around it, right? Because it's Waller, right? Yeah, Waller is speaking. So one of the Fed supervisors, right, the heads on the Fed, that make the decision of they vote on should we raise rates, drop rates, and the likes. We've had some outspokenness on the Fed in the last cut. One person said, no, we shouldn't cut anything. Another one said we should cut a half. And the rest of the Fed voted for a quarter point cut. So I don't know where Waller stood. I never looked into who it was that did that. I just knew the numbers that came out. So based on that, based on additional conversations being had, that conversation may or may not slip out something. Normally, I'm not really worried too much of Waller saying anything or not, but right now, everything is so tense with the Fed and the drop. And, Powell was not kind to tariffs. He was not kind to the economy and jobs and all of that. So, what little bits get said, even short term, even if it's just for today, bam, we get a crush on it or a bounce because of what they said. If Waller comes out and says, through some open conversations we've had, it seems like more of the Fed are leaning towards a half point drop instead of a quarter point. That could dramatically move the market one way or another just because they're saying maybe. All right. So just keep your eye on that report. It is late in the day, so you can get most of your trading out of the way. Would I have an open trade at 3:30 if I didn't need to? Probably not. Or you've got a fairly tight stop on it and you're managing the position. Right. Um, And then Friday is all tentative. Oh, actually, not all. Here we got 10 o'clock. It gets a two. Uh, it's not that big a deal. It's a 10 o'clock reports and they're orange. So could we see big moves based on them? Yeah, something was way off, but go and read who's actually putting the reports out and so forth. It's probably non-governmental that's going out on that. So is there any idea of staying over the election? What do you mean by that, Les? Staying over the election? You're talking about the one coming up now for governors and mayors and some of that. I mean, I know in Northeast we've got two massive ones between New Jersey governor and New York City mayor, right? But and then of course all the local stuff. I mean, we got signs posted everywhere all over our neighborhood. It's a very one-sided neighborhood where we live, and there are signs posted everywhere for it, right? Will there be a change? I don't know, But is that the election you're talking about? Oh, staying out. Gotcha. Yeah, I'm not. I mean, no, election day is election day. You're not going to hear anything until later in the day because polls don't close. Early voting, late voting is one district. Very heavily Democratic, and they have more of the blue collar jobs in that district, and they work later and can't vote until after work, where another district is more high end executives and they can take the time to, who knows, right? So I'm not worried about staying out. You're going to see moves the next day, but it's the holdover, less that you've got to be thoughtful of. Do I want to carry over into the elections on the 4th and into the 5th? And that's where I'm not doing much with holdover anyway, but that's probably where I'm going to have the biggest pushback is, ooh, I don't really want to do that overnight. Little concern right now. So, and there's a lot of funkiness, guys, that's going on in the market. I mean, look, I'm 61 years old. I lived half my life already. I got 61 more left. I made that decision. I'm going 122. Okay. But I got half my life left. Those that are younger and having to deal with some of this junk that's going on right now, my God, it's just nuts. It's crazy. FOMC minutes released on Wednesday, 11/19 at 1 p.m. Eastern. This should shed more light. Yes, very much so, Jim. Thank you for the update on that. Okay, so let's go back to Emmanuel. Market review. All right, so let's go look at the SPX. By the way, guys, a couple of notables. Broadcom. I love where Broadcom is. You'll hear this tonight in pop, guys. I'm looking for the pop to take place from there. If we get a close near here, we're in a bullish neutral bias rank of 1. Move up, retest, bounce. Boom, chocolate. There's nothing stopping me from taking that trade. We're in a great position. Oh, but Robert broke through the 8 here and then again closed below. Yeah. And if it gets above retest and bounce, I'm going to take the trade. But what if it drops? But what if it doesn't? You'll never know for sure that it's going to or not going to do something. You need to step up to that plate and swing the bat. If you're going to get up at the plate and hold the bat and just hope the pitcher throws really bad pitches so you can get a walk, it may work once or twice. But for the most part, they're going to throw the fastball right down the pipeline and you're going to get a strikeout, right? So you got to step up and swing that bat. So let's see, Alex. Is it time to redraw the fibs on SPX? I don't know if we had a bigger move, did we? I didn't think so. We got this here. And let's see. I didn't think it was bigger, but let's see. It is. It's actually 375. I did not. Yeah, I probably would not come off of this bottom. I'll probably come off of here. Just because of the gap up and the pullback. I'll probably come off here, but we're still bigger. So yeah, I'm going to leave that on there and I'll deal with this tonight in pop. I'm just going to put a note. I don't need that space in there. Let's make this a mo big. I want this to be very annoying. Bold. And red. All right. Good catch, Alex. Really good catch. It poked through this negative 618, but that's not the rule, Alex. The rule is closed on the other side of it, right? Not pierced through it, but closed on it. But we do have a bigger move overall than we did here. So we should. And if we redraw the SPX, we should redraw the SPY at the same time. So if we look at what happened today, we closed down here. We got a gap up. And right now, the open today was at 68.8232. The high was 68.8232. So we gapped up and opened up at the high. So what was that? That's the bulls trying to push forward their agenda of we're going to keep moving higher. And they failed from there. So the bears have been in complete control all day. Yes, granted, we pulled back to support and we bounced. We have not been able to get higher than our open. So the bears gave some of that control back. The bulls have been fighting back. But I am not opposed to having the move down. I actually would prefer to get a close near that line, not just a pullback to it. When we get the close near it, I can be much more excited about that level than I am right now. Right? I'm really looking for that bounce to come off of there. Yeah, I'm really looking for that bounce to come off of there, off of that level. And we got it intraday, but I really like to close near. The absolute best breakouts we have of new all-time highs are closed near. See this here? This was a breakout. Didn't give us an all-time high. That broke out of the 8, right? Oh, bam, boom, went higher. Yeah, okay. We closed here, a little bit higher high. Yeah, pull back here, gave us the all-time high. We closed right there. We were at a bullish bias rank of 1. Stock is right at the fib line. Moving average is in a close proximity. The 8 is in a close proximity. It's a perfect setup for us. And we bounce from there and gap away, gap away, gap away, which the last one is a failure gap. And we kind of roll back over. Yeah, it's a great zero line breakout, Brenda. Exactly. Great zero line breakout. Yes. Yes. And even better, we didn't just break the all-time high. That all-time high was right at that 67.65 level. That major super fib. Right freaking there. So right now, pull back into the fib and a bounce. Keeping in mind, we've got all-time highs to contend with. So right now, we moved up. We put in we had a lower low here. Now we have a higher high. If this becomes our bottom, I'll draw a line. If this becomes our bottom, I'll draw a line off of this bottom right here, and that becomes our higher low. What has to happen next? We would then have to break above the higher high at that point. And if we do, we'll be looking at that higher low, this previous line that I just drew now. We'll be looking at that. If it fails through that, that's where the worry starts to come in. That's where the contemplation has to come in of, all right, position 1 in the chair. I'm sitting back here, right? What's going on? What's my analysis tell me? Where do I see it going next? If we break through that level, there's concern. But the concern is nothing more than it's never going to be, oh my God, the world is coming to an end. I don't care about that. You know what I care about? Tomorrow. That's what I care about tomorrow. What's the next day show for me? Where's the potential bounce? Where's the potential fail? Where's the problematic component of it? It's not how far down are we going to go? I can't control that. Remember, you and I, Brenda with her 80,000 contracts, is not controlling the SPY. She's not. Period. She's not. Why? We're on the sidelines, guys. This is a game of professionals. We just get to sit on the sidelines and bet. That's it. We get to bet on it. We take the bullish, we take the bearish, we take the side. Whatever the trade setup you're doing, you're taking that directional move or that move, that setup. That's it. That's all we get to do. But if every one of us right now went about 1,000 shares of Microsoft, we're not moving Microsoft. We all bought 10 contracts of Apple, we're not moving Apple. We may move that one Apple option price short term because of the interest in it. Other than that, and I saw that when I was with Wade Cook Financial Corp. Right? WCFC was the ticker symbol of their stock. And Wade Cook had a pager. Some of y'all are like, what the hell is that? He had a pager. Go look it up. Okay? He had a pager, and they would page you the details of the trades. It was like $3,000 a year for the pager. And you would see, it would say, we bought, this contract, so we bought the 450 strike at $11. Okay? So now you go look at the 450 strike on whatever the stock was, and people just buy. Why? Because the main guy was buying it, right? You watch the stock, and the stock is going nowhere. You watch the options, and the options are climbing up in price. Why? Because wave one, there were 12 waves on that pager. The newest pagers, the ones that someone bought now, in the month of November, would be the first one to get the page. The next wave came out after that, the ones I bought them last month, and then the month before, and so forth. You bought them 12 months ago, you were the last one to get them. Next month, you'll be back at the top again. Because they couldn't send them all at one time. There was no technology at the time to do that. And you had a massive increase in the price of the option. So that $11 option would run up to $12, $13, $14. Why? Because everybody's buying that. I forgot the strike I said. The $400 strike, whatever it was, 450. Everybody's buying that strike price, and it ran up, falsely moving the market, and it came right back down. I sat in a live training, a futures training at night, and the guy that was doing the training said, watch this. And he wanted to sell his gold futures contracts that he had. And he was playing games on the entry system where he was putting an order in up here and then pulling it away. Big order, putting it in, pulling it away. And the market starts climbing up to his price. And they were all fake orders. He put it in, immediately hit exit, cancel. Put it in, now he would put in whatever, 50 contracts, cancel. Then he'd put in 42 contracts, cancel. Then he'd put in 56 contracts, cancel. Then he'd put in 39 contracts, cancel. He didn't do 50, 50, 50. He didn't want to make it recognizable, right? And then 10 contracts, whatever it was. And you're watching the price go up. Nothing else is happening in gold. You're watching the price go up. He's hitting enter, enter, enter. Finally runs up, hits his price because people seeing that someone is bidding it, but they don't know how to read the dome to see what's really happening. And he gets filled at, however higher, $2 or $3 higher on gold than it was. He gets filled, and as soon as he gets filled and stops putting these fake orders in, gold comes right back down to where it was. It's all a matter of understanding what you're doing in the market. All right? Did he falsely move that one contract? Yeah, gold didn't move, but that one gold contract did. Without a doubt. Yeah, Brendan said we get to take our training and trade it. Yeah, that's it. Exactly. SPX daily chart analysis you're doing, if you change them from the candles to lines, would this help traders see the bottoms better, or would it be too many lines and confuse traders? Jim, I have personally stayed away from the lines, and that's because I've gotten really good at seeing through the candles, right? The visualization of what's inside of that candle. I've gotten really good at seeing it, right? Where, this is not our bottom where it is now. That's the close, right? There we go, one more. That's the close. The bottom is just a little bit lower, right? I've gotten really good at seeing them, seeing through them. But yes, you could turn over to line chart to get a better analysis. There's nothing wrong with doing that at all. All right, so where do we go next, guys? We're looking at that 6909 level to the upside. We're looking at that. And I'm going to draw just to give you a quick update, and I'm going to remove it. I'm going to draw tonight from here to here. Right? So we're talking about the same 6829 level and just about that same 6920 level versus 6910. I mean, it's not much of a difference in there. Okay. So we're looking at that 6834 and the 6920 as our tops and bottoms. Okay. On SPX. All right. Let's go back in here again. Upcoming workshops, guys. Tonight, November 3rd, 7 p.m. is our inner circle. I will be teaching that. It's kind of a continuation where we left off on last week's, week and a half ago, whatever it was, 2 weeks ago, whatever that was, on the last update of our full intraday circle training. So we're going to go over the new components of the fib stuff that we talked about in there. And then Mastermind is tomorrow. I'll be teaching that. Patterns in a Flash Q&A is coming up on the 6th. And then Trading You and Monster Market Movers later than that. So they're not this week is what I'm getting at. Power Hour, Covered Call Explorer, E-mini, all on regular schedule POP. Yeah, Power Option Plays. Power Hour Trading Coaches Playbook is as well. And then Brandon's got 4 trainings out, guys, for his kick-ass with SPX. Do not miss that, right? Because he literally does, right? The updates he does and the numbers that he pulls with that are crushing, right? And it is pretty standard stuff. You know, it's you do nothing. You literally get a text message that says, "Ooh, here's what we're looking at. Hey, here's a setup today, but it's aggressive." Okay. He gives you all the numbers in there. What's the reliability number for it? You know, what's the probability of profit as his pop number. He gives you all of that. So you know, oh, wait, this has got a low probability of profit. I'm not going to take that one. I want my pop to be at least X, whatever X is. And there we go. Andrew just dropped a link in there, guys, for the SPX. So check it out. All right. Whoop. Holy mackerel. All right. And then weekly training topic. What is the next move for the Fed and how to trade it? Guys, the first thing everybody should be focused on right now is this website right here. Not this website right here. All right. I'll drop it to everybody in here. Let's make sure it's everybody. There we go. All right. I don't know if you're able to click on the link or not. If they're not, Andrew, if you could drop that in, that would be great. So I know I can click on yours. But this is FedWatch. You can go to different sites. There are different places you can check it out. But guys, look, right now, there is a 68.5% chance of dropping to the 350, 375 basis points. Right? 68% chance. There is a 31% chance of staying at the 375, 400. That's our current rate is 375, 400. Okay? That's current. All right? Right now. So, and it gives you the contract details and so forth, right? But I have nothing, zero, where there's any chance today of a half point cut. Now, this upcoming meeting is December 10th. It's not the November meeting. There is no rate decision in November. It's 10 times a year. November is not one of them, all right? Okay, thanks, Jim. Jim said the link did work. So you can go to this page and you can start playing around with it a little bit. You can go to future months and you can check it out up in here and see what January and so forth brings. Okay. But the very first thing is knowing what's going on. Yeah. So I did, Trip said he's showing 65.3. I did this a little bit earlier, Trip. So it may have changed a little bit from then. And it's not our website, so I don't know why they have differences if that's not it. But you guys, you're in the right ballpark. 68% is a 1 standard deviation move. So there's 1 standard deviation chance of it going down by a quarter point. There's a half a standard deviation of it staying the same. Okay, so we don't have a lot of deviation from that move. We're expecting right now. We're expecting that quarter point drop. Can we get some dissension and so forth based on other economic reports? And that's where the Fed is struggling a little bit with getting accuracy or belief in the reports that they're getting. How accurate are they or not? Yeah, interesting. It's going down. Yeah, who knows? You know, it could have been. Guys, you can bet on all of this, by the way. You can go, I know Robinhood has it. You can go into Robinhood and you can bet on who's going to win the mayor's race, who's going to win the governor's race in Jersey, how long is the Fed going to be out, on layoff and hold and all that. How long is that going to? There's so many. You can Senate races. You could bet on them, and it's percentages. It's a dollar. Every contract is a dollar. That's what the winning is. If you win, you get a dollar. If you bet on Mondavi for New York City mayor, you're going to pay. I don't know what it is today, but it was 86 cents last week. It's what you're going to pay for that. You say Mondavi is going to win. You'll pay 86 cents. If you win, you get a dollar. Okay. If you're betting on Cuomo, you'd pay 13 cents, and if you won, you get a dollar. Right? So, and I don't know what the exact numbers are. Right? I'm not saying they're equal, that those two numbers add up to a dollar, but you can bet on that as you can on the Fed. Right? So there are odds, Trip, that are pushing these things one way or another. Had a very low percentage, Trip said low percentage for a 50-point cut last week, but now gone. But it's gone now. Isn't that interesting, as Ryan would say? Yes, it is. And I don't know if you guys know, Ryan Litchfield was in a hotel in Jamaica, not Queens, New York, Jamaica, through that hurricane. He was in a hotel through that category 5. They're okay, but scary is an understatement. I saw a lot of his posts. I followed along with him through that. But so that was some scary stuff. But if you follow him, or if you guys are friends on Facebook, you'll see all of the stuff that he's put out there. All right. So we know what's going on now, right? So how are we trading? Guys, why would this be any different? The update's coming in December. We talk about and how to trade it. How to trade it is to trade. That announcement is a whole different ballgame. The day of the announcement, I do nothing. I sit back and watch. Position number 1 in the chair, all the freaking way back. I do nothing. Not that I'm holding overnight, or not that I plan on holding past 2 o'clock. And if I do take a trade, I'm going to be out of that trade before 2 o'clock. I'm not taking a chance. I'm not adjusting levels or stops or doing none of that stuff. I am not going to get caught on the wrong side of that. Troosh, off with your head, right? I don't want to deal with it. Just don't want to. Okay? I'm going to back up and trade that day if I want to. Usually not, but I am out that same day. You're going to see larger bid-ask spreads, higher volatility, based on, they don't know what the Fed's going to do. So the market maker wants to protect themselves. In case you jump in, they don't get stuck at that point with being in a bad trade, or being on the wrong side of a trade that you just did. So it's all CYA, cover your assets, for them. So for me, it's still short term, right? I base everything that I do based on the S&P 500, everything. Based on the patterns and the setups and so forth. If you start talking it out loud to yourself every single day, right? Now, I get it. If you're on a subway and you're looking at the charts and you start talking out loud, they're going to call the cops on you, right? And bring you to a rubber room. But if you start talking it out loud to yourself every single day, you're going to hear things that you don't really hear, that you don't really recognize, that are not verbal. Because when you're looking at the chart and you're just quiet, and you're talking in your head, all you're doing is using your eyes. Me, I'm looking at it with my eyes. I'm speaking it out loud. So there's another sense. I'm hearing it. Being half Italian, I'm talking with my hands. That's another sense. And if you don't think it is, ask any true Italian if hand gestures are a sense, and it is. You get a pretty good idea of what I'm going to do by the way I'm moving my hands, right? Or someone else is moving their hands, right? My grandmother, you knew when she reached back like this, she was grabbing a belt or a spoon or something. You knew what that hand gesture was. Okay? Period. Sicilian grandma, no playing around. So talk it out loud. Speak it out, and you're going to start hearing and catching things that you didn't get before. Every great breakthrough that I have had, Fibbits and all of those, all came from verbal communication with myself. Every bit of it. Teaching others, talking to others, saying, have you noticed this pattern? What do you ever see this? Yeah, you see something around, right? What do you see? What do you do? How do you react to it? How do you handle this? What are you trading, right? Asking other traders. Those that are in inner circle know that teaching is not even a question. You're not even being asked. You're being told by Amelia, by Trip, by me. You got to teach, guys. That's the best way to get better at this, is to teach. Mastermind, they've heard us say it 1,000 times, right? You have to teach. You want to get really good at this? Go teach someone how to do it. That's how you become great, is by teaching somebody else. Chicken trades, Trip said, on account can work, but it's not quite repeatable enough. Yeah, exactly. It's not. It's not. For me, I'd rather I'll step back on Fed day. I'll wait. I'll pick up the pieces either at the end of the day if I get a nice move in there that I can call pure directional and it's going to go a way. I'll consider a trade there, or I'll just wait until the next day, the following day, and I'll jump in there. But guys, you need key pullbacks. If we go back to, who was it? Broadcom, right? If this is where we close on Broadcom, right? If this is where we close on Broadcom, we're in a bullish bias rank of what? Right? Is that a good setup? Yes. So I want to identify that. If I go and look at Adobe right now, do I have a good setup? Well, if this is where I close, I'm in a bearish bias rank of 3. Bearish isn't bad, but rank of 3 gives me nothing. I don't have a setup. If we pull up to the next fib line, 8 moving average crawls up a little bit, we roll over. Yes, I've got a potential setup, especially if the S&P is going down, right? But you've got to trade this in such a way that we're looking at a setup that says, okay, this is happening now. If this happens, then do that. It's all if-then statements, every bit of it. When I take this trade here, if I took this trade tomorrow, I'm going to have 4 things that I've got to be cognizant of. The very first thing is my ultimate target is going to be up here, right? That's my ultimate target, and I'm going to number these in a second. My second thing will be my micro day trading exit right there, okay? And I'll put some words to them in a second, right? My third thing would be my 345 exit. If we're not out, we're out at 345. And my fourth is my stop. If I'm wrong, I'm wrong, and I got to get out of the trade, right? So let's get that crosshair off of that line so doesn't look like we've got a line over it. So one here is my target. That's my main goal for the day. Number 2 is my micro day trading. MDT, micro day trading. That is where it moved up really fast, pulled back, take the profit, walk away, don't hold on until the end of the day. Number 3 is my 3:45 p.m. exit. And then number 4 is my stop. Rob, isn't the stop more important than the others? Yeah, probably. But I don't want the stop to be the first thing I think of. I don't want to go into this trade thinking, I'm losing money. It's going against me. This is what's going to happen. That's the last thing I want to worry about. Here's my first exit, my ultimate. I'm going to make $10 if I'm right. My micro day trading, I don't know what I'll make. $2, $3, $4. I'm happy with that. Didn't hit either one of those through the day, and we get to the end of the day, 345, exit number 3. I'm out of the trade no matter what the price is. Market order, done. Stop market, you're out. Number 4, it hit my stop. Okay, it's all right. If you have a trade set up that wins 65% of the time, that means if you place 100 trades, 65 are going to go your direction, 35 are going to be learning opportunities. It's a learning opportunity. It's not a loss. It's a learning opportunity. That's all it is. If it went against you, did you get something out of it to help make you better? To help you become a better trader? Guys, this setup is, to me, the ultimate setup no matter what's going on in the market. If you're a day trader, this is the way to do it, to me. Now, that's a standard trade setup that I'm taking a day trade off of. It's not a Hakanashi scalp that Trip takes. It's not an intraday trade setup that Amelia does with a credit spread or a debit spread. It's the way that I do it. Now, take what I did and say, I like this, I don't like that, and modify it to make it fit you. And I'm okay with that. But here's what I would tell you. Paper trade my way first. Get really good at that first. Get to the point that you can close your eyes and know what key to hit on your keyboard when you're ready to place that trade and enter that trade. You just know exactly what to do. You don't have to look at a cheat sheet or read, okay, what is this now? Oh, yeah. Oh yeah, that's it. I got to do this next. You should know all of that by heart, right? Get to that point with non-funded trades. Roman is in here. When he first came to me from another company and said, "Hey, you're using TradeStation. What do you use?" I said, "TradeStation." How much time do I got to spend on it? I said, if you could put an hour or two a day into TradeStation, I would be ecstatic. So he goes and puts 8 hours a day and just dug into, oh, what's this button do? Oh, what's that button do? And learned everything. He knows more on TradeStation than I do, right? I'm not saying you need 8 hours a day, right? But that's the level of, you can't tell me that I won't be successful at something because I'm going to do it no matter what you do or say, right? And that's exactly what I want to see, is just that. Um, Jim said you learn from your five senses. Using one sense only is cutting yourself short. Talk it out loud. Use a second sense, and it's three because you're talking it and you're hearing it. So it's recycling it. It's getting back in your brain through your ears again. Buy to open 100 contracts. No, I wanted 10. Oh, you heard that, right? I'm coming up on a year, so I'm still very much a rookie, but I've been enjoying teaching my 13-year-old nephew about this stuff since he's interested in learning how to make money. There you go. I love that. I love teaching this stuff to kids. Did you have a plan? Did you follow that plan? Did you learn something? Good trade. Roman said focus, boldness, and discipline. There you go. I love it. I love it. All right. And guys, you're hearing advice from some really good traders here today. All right. Okay. We got a couple minutes left. What trades do you want me to take a look at, guys? Drop those in. That's the last thing on our list. Holy mackerel, Alex. What was that? Let's see. I'm going to change this over to all symbols. All right. Alex, if I have time, I'll read out loud. Sorry, it's we're getting a little tight here today. Q. All right. So Brenda's asking for Qs. Brenda, I love where it is. Moving average is not helping us any. Same scenario. We might want to revisit. Do we need a new fib in there? I don't. We did get above the 618. I'm going to watch it a couple of days. So just because it got above doesn't mean I have to redraw. Okay. It's just an FYI. If it drops down, great. If not, then we'll look at redrawing. But if we had this close right there, the gap up, the pullback, and the bounce. If you're a betting man or woman, Brenda, that gap up, pullback here, and bounce was the opportunity to take the entry, right? No ifs, no ands, no buts. You've got a fib line right here at 629 and a half. We closed at 630 and a half. We got 630 and a quarter. So 75 cents away. We got down to a low of 630, 629. We'll call it 630, 629, 629.65, 629.85, 20 cents away. We came right down in there and bounced. Great opportunity. So you're in at 631. It's at 633 right now, right? What a great setup on it. But if you didn't take the trade and we're looking at it now, pull back to the 629.65, 629. Let me get this out of the way. All right, we got $17 is so 30, 47. Yeah, we might need a fib in there, Brenda. We're getting close. We're going to put a negative 809 in there. We're right at the junction of it. We're right on the cusp of it. So we'll put it in. That's 638 is our resistance level. So pull back, bounce. I love the setup. SPY. Any other candidates, guys? Drop them in. Let's see. SPY. So we've got to redraw on SPY, Brenda. And again, I'll do it tonight in I'll do it tonight in pop. But that's what we're looking for. Got to mark it or else I'm going to make a mistake. Okay. So 81, 89, 8 points. We don't need a fib in there. So we're looking at that pullback, Brenda, to that 681 and the bounce. 689 is resistance. I'll take it all day long. And then GLD. All right. So it looks like we might have found a bottom, short-term bottom on gold right now. So moving averages are up just a little bit too high, Brenda. So I'd love to see this drop off a little bit to get the moving averages down. Eight's still coming down. 21 is not. It hasn't. This quick move up, quick move down has really messed up. From here up and here down has really messed up the moving averages. So if we can get this to settle off a little bit, that would be great. Where the moving averages come down, we bounce. So a couple more days of sideways, smallish move down and bounce off that 366 level up to 380. So we got a lot of opportunity up in there um, for this, right? So there's some great opportunity there. So Alex said real quick, anyone might find it helpful on some of my covered calls. The market makers like to smoke some stuff on Friday expirations. I'd sell a call for 40 cents in the week, and later the stock would be lower, nowhere near the strike that I sold, but the bid would literally be zero, and the ask would be over $2, over 5 times what I sold it for, an hour before the markets closed on expiration Friday, and it wasn't even in the money. Yeah, it's pretty common. I could have let it expire worthless. The joke's on them with that pricing, but on some, because they offer 2 to 4 cents by the close, I could sell the next week, and then they took it immediately. Don't be fooled by the shenanigans. Well, just because there's a big bid ask spread in there, guys, that doesn't mean that they're not willing to negotiate. They may be trying to scare some people, but it doesn't mean they're not willing to negotiate. The closer you get to expiration, they really would rather close those contracts out and know they've got them done than have to get it exercised, because they're not making anything on the stock exercise, or minimal. They make the money on the options. You close out that trade, they make the difference of the bid ask spread. I did it with TradeStation with Google before the split when they were thousands of dollars, right? A couple years back, where I was on the phone with TradeStation, say, how in the world can there be a $4 bid ask spread when we're $60 out of the money? Market maker doesn't have a rule they've got to follow. They can make it any price they want. So I'll show them, and I chose not to close it out over the weekend. Thank God it worked in my direction. And that next Monday, of course, it was worthless, and nothing got exercised. But that's not necessarily the the path. So know what you're up against when you go and do stuff like that. So with that, ladies and gentlemen, we just dropped a couple links in there today. Go ahead and check those out. Have a great rest of your day. I'll leave the room open for a couple of minutes. Make sure you get into Brandon's training, folks. Don't miss out on that. It's going to be phenomenal. So have a great one, everybody, and I will see you all at our next update. Bye for now.